I am on the hunt for a consumer staples company to add to my portfolio. Recently, we looked at Campbell's and it did not make the cut. Today, we will look at Hershey to see if it's worthy to be added to my portfolio. Is it a kiss or a miss? Now, let's look at my portfolio performance and we'll see here that I'm up 10.69%. Real estate has gone in the red. My international ETF has gone in the red. And in the middle, you'll see a very lonely consumer staples because there's nothing there. Now, this doesn't mean I have to have a consumer staples company to add here, but it would be nice just to have some diversification. So I'm on the hunt and we will see if Hershey, again, will fit that space. Now, before I get started, I am offering you guys, because you're my investing family, Ally Bank says that I can share with my family and friends an offer, and the link will be down in the description to open up an account and fund it, and you'll get $100. Now, I like to utilize the high yield savings account. It's now earning 4.25%. Why not let your money grow, that rainy day fund, that fund for a vacation, instead of letting it sit in the big banks where it's only 0.1% interest? This is 4.25 plus I have 5 openings, so if you're one of them, you get the $100 regardless. Just to move your money over to somewhere where it's going to earn more for you is a great thing. So if interested, the link's in the description again. Now, Hershey, let's dive in. This company engages in the manufacture and sale of confectionery products. Now, confectionery is something we don't hear a lot of, that word, and really that just means sweets and sugar. They also are in pantry items in the U.S. and internationally. Now, the company operates through 3 segments: North American confectionery, North American salty snacks, so that's sweet and salty, and then internationally is their third one, the international segment. And it offers chocolate and non-chocolate confectionery products, gum and mint refreshment products, including mints, chewing gums, and bubble gums, pantry items such as baking ingredients, toppings, beverages, and sundae syrups, snack items comprising of spreads, bars, snack bites, mixes, popcorn, and pretzels. There is a lot. Now, they also have a strong brand and product profile. We're talking about names like Reese's, Kisses, Jolly Rancher, Almond Joy, Brookside, Bark Thins, Cadbury, Good and Plenty, Heath, Kit Kat, Payday, Rolo, Twizzlers, Whoppers, York, Icebreakers, Breath Savers, Bubble Yum, Lily's, Skinny Pop, Pirate's Booty, Paqui Chips, which are my favorite, Dots Pretzels, and One Bar brands, amongst many others. So there's a lot there, and they have a good mix of sweets, salty items, healthy and unhealthy, or we can just call it fulfilling a need. So what I want to do now is go over some of the bad things and challenges I found or could think of with Hershey, and then some of the good things and opportunities with them. So let's start with the bad, the challenges. The first thing is cocoa prices have now spiked to a 46-year high, and sugar prices are near their highest in more than a decade. Now, Hershey's largest segment is that confectionery or sweet segment, so this is very important because this is going to increase the cost for them in a big part of their business. Now, Hershey can do a few things here. They can pass these costs on to the customers, which I think is risky because with the high inflationary times, everything is so expensive right now. You push things up too much, people will pull back. And I think a lot of companies over the last year and a half have already increased prices so much that many companies are now saying, okay, we're going to cool it off. We're going to stop raising prices for a while now. Or Hershey's can just let it hit their margins and their financials and give it time till they can figure out how to handle this better. So to me, that increase in the cocoa and sugar prices are a challenge for Hershey's. Now, the next bad or challenging thing for Hershey is kind of pivoting off of that, and that's inflation. Now, inflation could hurt spending on snacks as consumers pull back. To me, snacks are not necessary purchases versus something like you would buy for dinner, breakfast, or lunch, such as eggs, milk, meat. Some things will always be a purchase when a consumer goes to the store, but I think snack items can be cut out and not put in that basket if needed. So I think there's just less dependency on snacks from consumers versus those other staple items like milk and cheese and meat and things that you really do use in most of your meals daily. So that's another thing. The next thing is 2 out of the 7 U.S. Hershey plants are unionized. They operate under a collective bargaining agreement, and renegotiations could hurt Hershey. Now, we have seen a lot of demands and strikes this year. It's like the year of strikes. So it adds a heightened level of concern as an investor But overall, I think the risk is low because Hershey has not come out and said anything that they're concerned about a strike or anything like that. And it's only 2 of their 7 plants. So I think if things did develop in a negative way with renegotiations, which would increase, labor costs, let's say, or a possible rare strike, I think Hershey's is still positioned well where it could still operate, unlike others that are fully unionized. So to me, this is a somewhat of a bad or challenge, but not really high on that kind of scale. Now, the last thing I'm going to mention that I think is kind of a negative for Hershey, that bad challenging thing, is they don't really have products that are in that recurring buying category for me. It's not a guarantee that consumers will go and buy this with every single grocery shopping trip, nor do they possess any type of subscription-based model. You think of Costco, they have their membership. You think of Netflix, you pay monthly for that service. Microsoft, Apple, they all have that kind of subscription or membership type. I call it a mindless expense because you sign up for it and you just kind of forget about it. Where with Hershey's, it's these consumers are going to a store and they're deciding there to buy it or not. It's right in front of their face instead of they subscribed, they said it and forget it. So Hershey's is constantly having to think of ways to market to consumers to buy every time they go to the store, and I'm not sure if I like that. There might be some better options out there than Hershey's in this aspect. Now let's move from the bad to the good and the strengths of Hershey's. First of all, Hershey has a 45% chocolate U.S. market share. They're the big dog. Chocolate is king in the sweets category, and they have the top spot. And this is great for Hershey's. This creates stability, it creates growth and opportunity. So I really like this. Now, another good thing with Hershey's is they do have popular products, and a lot of people view their products as those of quality. And consumers are more likely to choose a Hershey product rather than a competitor's product because of familiarity. And that is so important, and Hershey dominates here. A consumer is going to be comfortable with buying a Hershey product because they see it often, and that is more likely, again, to make them buy that product. So I think Hershey's has a good reputation, familiarity, and consumers are comfortable with their products. So that's a good thing. And then lastly, we'll mention for the good side of things, I mentioned this with Campbell's because they were acquiring Rao's, which is a premium quality, healthier food option. And a lot of the big companies are doing this. They're pivoting towards healthy, focused brands, products, and foods. And Hershey's is no different. In fact, they say here, consumers are focusing more on health, and Hershey's is here for it. So Hershey's is offering a lot of healthier options, and they're increasing that year over year. And they offer things such as zero sugar, low calorie, high nutrition, higher protein, plant-based, and organic options. And I love that they're pivoting. They're going after those dollars where they see consumers pivoting and spending more on. And I see it as well when I go grocery shopping. So many products have labels that just bombard you with these health claims, and consumers are eating it up. And so this is a good thing if you're investing in Hershey's, and something I like. Now let's move to financials. We obviously need to look at this, so we're gonna look at their stock facts. And since I just did a video on Campbell's Soup Company, if you're interested, go watch that. I thought we'd see a comparison because Campbell's I did not think was a high quality company. I said pass on it for reasons that if you watch that video, you'll see. So I just thought it'd be fun to see maybe lower quality versus what I deem Hershey a higher quality company. So if we look at price per earnings, the trailing 12 months, Hershey's PE ratio is higher than its last 5-year average, where Campbell's is opposite. So that could mean that, obviously this company is more of quality, so people are willing to pay more of a premium. But I would like to see that PE ratio fall below that 5-year average for it to move into a good valuation. Now its price per operating cash flow is, almost double what Campbell's is at 20.51. But rightfully so. If you look at the cash flow growth over the last 5 years, the average, it's a 13.43%. Campbell's is negative almost 2%. Declining cash flows where Hershey's is growing very healthily. Now revenue-wise, over the trailing 12 months, they're growing 11.66. Over the last 5 years, they've had a 6.75 average. So their revenue the growth is increasing, and that's great. Gross margin-wise, they're over 10 points higher than Campbell's Soup. They're at a 47.5, and return on equity is awesome. It's more than double Campbell's at a 52.90. Now, when it comes to debt, they do hold higher debt, but I will explain here in a minute why I don't see that as an issue. And looking at the dividend yield, it is lower at 2.20 versus Campbell's 3.37, but they do have the lower payout ratio at 54.87%, and they have amazing dividend growth. Not just only for the company itself, but you compare it to Campbell's, who nearly has no growth. The 1-year growth for Hershey's is a 15.06%. The last 5 years on average is 12.69. That's amazing, that's impressive, and that's a good thing as an investor. Now let's look at their free cash flows. This is where you take the operating cash flow and you take out any capital expenditures. So we want to see if their free cash flow is growing. That's very important, another health metric to look at. So the top is by year over the last 5 years, and the bottom is by quarter over the last 5 quarters. And with the year, you'll see it going up year over year, with the exception of 2020, but overall, it's growing. You draw a line, it's going to be going up. And with the quarter, I like to compare quarter over quarter. So second quarter of 2023 versus second quarter of 2022, it has declined some, but again, I'll point out it's up from first quarter. So overall, the cash flows I think is very strong. They're positive, and when you look at the year, they are growing. And then the next thing I want to look at is net income. This kind of tells me, are they managing their expenses well compared to the sales and the revenue they're bringing in? So with net income, the top is the last 5 quarters, the bottom is the last 5 years. So quarter-wise, again, I'm going to look at that second quarter of this year versus second quarter of last year, and it went from 316 million to 407 million. So to me, that's growth. I love to see that. And when it comes to looking at the years, over the last 5 years, it's overall going up year over year, with maybe the exception of 2018, 2019. But this is a great sign. They are increasingly controlling their expenses, increasing their sales, and I just think this is a very good positive thing. Now, let's look at their balance sheet, because I want to point something out here. You'll see their total assets, their long-term debt, and their total liabilities are highlighted. What I want to point out is their total assets is going up faster than their total liabilities, which includes that long-term debt, which means their debt to equity ratio is probably declining. So they're responsibly utilizing debt, and overall this is great to see. I'm very comfortable with that. Now from their earnings, we're going to look at their different segments. You'll see here that their salty and international segments are growing faster than the confectionery or the sweet segment, but its confectionery segment is the largest. So you have to put that in perspective. This is why you analyze and look at the company's financials, because you might be like, oh, salty and the international are growing faster. What's happening in the confectionery? Well, the confectionery is such a large component. Of course, it's not going to grow as fast as the other ones. But on the very right side there, you'll see the change in growth. So you'll see the confectionery and the sales, which is the top section, is growing at 7.7%, and the income in the bottom is growing at 10.3%. And the other ones are growing very healthily, well into the double-digit range. So this is fantastic. Financials look great. So that leads me to the quality checklist. I look at this before I buy a company and see how many of these 6 items get checked off. I like to buy when all 6 are, but sometimes I'll make an exception for 5 of the 6 being checked off. So let's see. We just looked at financials. They are solid. I give that a check mark. As far as good management team, this is my first analysis of Hershey's. I've looked at it a little bit before, but I usually, if I'm going to be very serious in buying, which I might, I will look at the management team, read their profiles, research them. I haven't done that, but what I will say is with the strong performance of this company, there has to be some really good decision making going on at the top, and so I'm going to give this a check mark for the good management team. Now, positive brand recognition. Absolutely. This company is very well recognized by consumers, and that is staying power and growth. So green check mark here. Now, products and services. I believe they have great products, but again, the negative for me here is they don't have, I think, as strong as a repeat customer as other types of businesses like an Apple or a Microsoft. I realize, they're different industries and segments of the market, but that's the kind of businesses I like to, invest in. So for me, I'm going to leave this one unchecked. It's close, but I think, without that membership or subscription, there's just a little bit more risk than with other companies. So moving on to the moat, I'm going to give this a solid medium moat, and I'm still going to check it green because I think it's a strong medium moat. And why I say medium is there's just a lot of large food and snack companies out there. You think Pepsi, Nestle, Kraft Heinz, Mars, Kellogg's, General Mills, Campbell's, and more. So it's very crowded. But the one thing they do have that's positive is they have that top spot with the chocolate and sweets market share. So overall, with that mix, I give them a very strong medium moat, and it's enough to give them a green check mark. Now, as far as valuation, I think they're at a good valuation, but I think it could be better. It could be more attractive. So I'm going to leave this one unchecked because it's almost there for me, but not quite. I do want to see that PE ratio drop lower. And of course, I always factor in a margin of safety, so it's just not there for me. So in conclusion, this company is moving in the right direction, and it has for a very long time, and I think they are at a good valuation, right? Now, they could be better, but if we look at their stock chart, we'll see here over the last 5 years, they've gone up an impressive 115%. That is over like 22, 23%-ish gains per year, and that's amazing. Now, they recently, back in May, had an all-time high with the stock price. It's since gone down 22% since May of 2023, so just a few months back. So maybe I think it is kind of entering this range where I am going to possibly consider it. Another thing I like to look at, but I don't, I take this with a grain of salt as well, is the stock price forecast. Now, there's 15 analysts looking at this, 5 say buy, 10 say hold, and they all collectively say there's about a 21.48% upside potential over the next year, which is pretty impressive. Again, going along with their average year-over-year growth over the last 5 years. And so, yes, right now their stock price is about $214. They're estimating it could go up to $261. So a quality company with some cons that I don't like, but overall the positives outweigh the negatives for me. I will keep Hershey on my watch list. It's been on it for a while, but I do think it's getting more towards an attractive entry point. So if it falls below that 5-year PE ratio average of 25.56, and I have the capital, I may open a position. But I would like to research some more consumer staple stocks to pick the best one when it comes to quality versus valuation. And Hershey's is trading at a premium, but for good reason. I would just like more of that margin of safety baked in for me. So again, it needs to drop below that 5-year PE ratio average for me to start considering it and possibly buying it. Do you like Hershey as an investment? What consumer staple stocks would you recommend? Maybe I can do a video on it as I am searching for one, and if you have one that you think is worthy, I will definitely consider it and possibly do a video. Again, be sure to take advantage of that $100 with the Ally Bank offer that I have with the link down in my description. Open up an account. You could utilize the high yield savings account. Why not make 4.25% on your money? And that's for 5 people, so be sure to get in there. But even if you don't get that, it's just a great thing to do. So thank you for watching Mark Arnold's Finance, and I hope you guys have a great day.